Welcome to Podcastify, your personal generative AI podcast. $4 trillion. 4 trillion. It's almost unimaginable, isn't it?
It is. We're talking about NVIDIA, right? Hitting that market cap milestone?
Exactly. First company ever to do so. Kind of blows the mind, yeah?
Yeah, and what was that about Nancy Pelosi's options trades? I saw something about that connected to NVIDIA.
Right. Apparently, some options trades she disclosed last year, well, they're looking pretty good right now. Up big, as they say.
Oh, so it's like adding another layer to this whole NVIDIA story.
Definitely, it fuels the bullish sentiment, reinforces NVIDIA's dominance, I'd say, in AI and hardware, you name it.
It's a powerful narrative. Dominance is the word, I think.
It's not just the 4 trillion, though. It's how they got there. That's the real story, isn't it?
You're right. It's the underlying, the engine driving this growth. AI, that's the key.
Absolutely. And the fact that, someone like Nancy Pelosi
Was in on it? Yeah, that adds a certain piquancy, shall we say.
piquancy. I love that. It's true, though. It lends credence, I think. When you see those kinds of trades,
From someone like her, yeah, it reinforces the narrative. You think she knew something we didn't?
well, who knows? I mean, insider trading laws are complicated. It's just interesting, is all I'm saying.
Interesting is an understatement. It's like a validation almost from the highest echelons of,
Of power, exactly. And that kind of validation, that whisper down the lane, it adds fuel to the fire.
it does. It's like a self-fulfilling prophecy almost. The stock goes up, Pelosi's trades look brilliant, which further boosts the stock, and so on and so on.
So this Targa Resources dividend, $1 a share quarterly, that's pretty hefty, no?
$4 a year. Yeah, not too shabby, especially considering, the market.
Has been, shall we say, volatile lately. Yeah, and that 5-year performance, beating the market by over 42% annually, that's,
Remarkable, consistently outperforming. That kind of steady growth, it's compelling.
it is. It suggests stability, reliability, which, let's be honest, is kind of what you want in a dividend stock, right?
Exactly. You're looking for that steady income stream, something you can, count on.
Especially in these uncertain times. A 4% yield, it's something, isn't it?
It is. It makes you wonder, what's their secret sauce? What are they doing that others aren't?
Well, energy, right? It's a vital sector, always in demand. But even within energy, Targa seems to be doing something extra.
It's that 42.65% annual outperformance over 5 years. That's the real head turner. What's driving that kind of growth?
Yeah, is it sustainable? That's the million-dollar question. I mean, past performance isn't.
A guarantee of future results, right? We've all heard that one before. Still, it's impressive.
Impressive, isn't it? That 42.65% annual outperformance over 5 years for Targa Resources, it's remarkable.
It is almost unbelievable. 57.09% average annual return, that's something else.
It makes you wonder, how? What's their secret? I mean, energy is a good sector, sure, but this is exceptional.
Yeah. Outperforming the market by that much consistently, there's got to be something special going on there, some kind of edge.
And that dividend yield, right? Around 2.7%. It's not the highest, but combined with that growth, it's attractive to say the least.
Attractive is an understatement. It's a powerful combination. Growth and income. The best of both worlds, really.
Exactly. It's the kind of thing that gets income investors and growth investors all excited, appeals to both crowds.
Right? It's like a unicorn. Rare to find that kind of balance. So what do you think? Is it sustainable? Can they keep this up?
Well, that's the million-dollar question, isn't it? Past performance and all that.
Right. Past performance is no guarantee of future results, but still, it makes you think.
It does. It makes you wonder if maybe, just maybe, there's something real there, something lasting.
So shifting gears a bit, American Airlines up 12.7%.
Yeah, big jump. All thanks to Delta, apparently.
Delta's positive guidance, right? That's what sparked it.
Exactly. It's interesting how interconnected everything is. One airline's good news can lift the entire sector.
It's like a rising tide, I guess. Lifts all boats. So closing at $12.94, that's still pretty low, historically speaking, isn't it?
Historically speaking, 12.94 is, well, it's not exactly soaring, is it?
No, not really, but a 12.7% jump in a day, that's noteworthy. It's a sign maybe of
Renewed confidence? Perhaps. It's interesting how Delta's news
lifted the whole sector. Yeah, like a rising tide, all boats and all that.
Exactly. It shows you how interconnected everything is. One company's success,
Can boost the fortunes of others, especially in the same sector. So, what about new holdings? Down 4.5%. That's,
not great, especially on a day when the market overall was up, right?
yeah, kind of a red flag, maybe. Falling while the market rises. It makes you wonder what's going on there.
It does. High volume, too. That suggests significant selling pressure.
$13.03, that's a bit of a drop. What do you think's behind it?
So, new holdings down 4.5% on a day when the market was generally up?
Yeah, that's what caught my eye too. Not a good look. Especially with that high volume.
Almost ominous, right? 107.8 million shares traded, that's a lot. Way above the average.
79% above the 50-day average, to be precise. That kind of volume, it suggests something significant is happening.
Profit taking, maybe? Or institutional repositioning. It makes you wonder.
It does. When you see that kind of divergence, stock down, volume up, it's a red flag.
A red flag indeed. Something to keep an eye on for sure. Now, Endeavor Silver, a $60 million ATM offering? That's interesting.
Interesting. It's unusual, isn't it? An at-the-market offering. What do you make of it?
Well, it could mean a few things. They might be raising capital for expansion, acquisitions, or maybe something else entirely.
Something else, like what? Debt repayment, maybe? Or
Shoring up their balance sheet, possibly. Or perhaps they see an opportunity, a strategic investment. Who knows? It's hard to say for sure.
it is. But $60 million, that's a substantial amount. It makes you wonder what they're up to.
60 million. That's a chunk of change, even for a company like Endeavor Silver, no?
It is. An at-the-market offering like this, it raises some eyebrows, doesn't it?
It does. Dilution, right? That's the first thing that comes to mind. Existing shareholders, not always thrilled about that.
No, not usually. But it could also mean growth, right? New projects, acquisitions. Maybe they're seeing an opportunity.
Perhaps. Or maybe debt repayment, shoring up their balance sheet. There are a few possibilities.
Right, right. It's hard to say for sure without more information. But 60 million, that's a lot of money. It definitely makes you wonder what they're planning.
It does. Something to watch for sure. Now, TC Energy earnings call scheduled July 31st, 2025. Pretty standard stuff, yeah?
Yeah, routine announcement. Q2 2025 earnings. Webcast. Nothing out of the ordinary, really.
So TC Energy, earnings call coming up July 31st, 2025. Pretty standard, right?
Yeah, Q2 results. Teleconference and webcast, the usual.
But there's always more to it than just the numbers, isn't there?
Oh, absolutely. It's the context, the narrative. What are investors actually listening for?
Exactly. And in this case, I think it's all about debt management and those pipeline projects, of course.
Right, right. Debt's a big one. Always a concern, especially in this economic climate. Uncertain, shall we say?
Uncertain is an understatement. So yeah, investors will be looking for reassurance, stability, a clear plan for managing that debt.
Definitely. And the pipeline projects, those are crucial for TC Energy's future, aren't they? Growth potential and all that.
Absolutely. Any updates on those delays, cost overruns, that kind of thing, investors will be all ears.
Yeah, any hiccups there could spook the market. No doubt about it.
So July 31st, mark your calendars, folks. TC Energy, debt and pipelines. That's the story.
It is. And this take deals thing, I'm assuming that's a typo? Meant to be Takeda, the pharmaceutical company?
Yeah, must be. Though nothing much there, it seems. No actionable data, a bit of a dead end.
Okay, moving on then. The OCC, Office of the Comptroller of the Currency. New head, apparently.
Jonathan Gould, ex-Bitfree executive. Interesting, no? A crypto guy, heading up a major banking regulator.
Very interesting. 5-year term. That's a significant appointment. What do you make of it?
Well, it suggests a shift, perhaps. A recognition of the growing importance of digital assets, cryptocurrencies, that sort of thing.
Maybe. Or maybe it's just the right person for the job, regardless of his background. Who knows?
It's hard to say for sure, but it's definitely noteworthy. Something to keep an eye on, this convergence of traditional finance and the crypto world.
Definitely. Gould's appointment, it's a sign of the times, perhaps. The changing landscape of finance and regulation.
So Jonathan Gould, huh? Ex-Bitfree, now heading the OCC. That's significant, wouldn't you say?
Significant? It's huge. A crypto guy leading a major banking regulator? That's a game changer, potentially.
Potentially, yeah. It could signal a more open approach to crypto, right within the banking system. I mean,
Exactly. Favorable policies, maybe? Easier integration with traditional finance? It's intriguing, to say the least.
intriguing. And potentially very good news for certain fintechs, no? Like new holdings, for example.
Oh, right. New. They could definitely benefit from a more crypto-friendly regulatory environment. Yeah, this Gould appointment, it's worth watching, for sure.
Worth watching is an understatement. It's a potential catalyst for the entire crypto space, really. Now, double verify DV, class action lawsuit, huh?
Yeah, Rosen Law Firm covers investors from November 2023 to February 2025. 2 years almost. That's a long time.
It is. Purchasers of common stock. So anyone who bought DV during that period, potentially affected, right?
Potentially, yeah, depending on, the specifics of the case, what the lawsuit actually alleges.
Right. We'll have to wait and see, I guess, what the outcome is. But a class action lawsuit, it's never good news, is it?
No, not usually. It creates uncertainty, volatility. That kind of thing can spook investors, drive the price down.
So double verify DV class action lawsuit, not good, right?
Not good at all. Rosen Law Firm, covering investors from November 2023 to February 2025. That's a significant chunk of time.
Yeah, anyone who bought stock during that period, potentially affected. Purchasers of common stock, ouch.
Yeah, ouch is right. Depends on the specifics, of course, but still, a class action lawsuit, it casts a shadow, doesn't it?
It does. Uncertainty, volatility, the whole 9 yards. Not what investors want to hear. It can spook them, shall we say.
Spook 'em good, drive the price down. We'll have to see how it plays out, but yeah, not a good look for Double Verify. Now this next one, Warner Bros. Discovery, WBD, woke Superman film, what's that all about?
Apparently, some actor who played Superman before, he's not thrilled with the new film's direction. Calling it woke, stirring the pot a bit, wouldn't you say?
A bit, he's throwing gasoline on the fire. Woke is such a loaded term these days. It's polarizing.
It is, and that kind of controversy, it can impact box office performance, right? People might stay away if they think it's too preachy or whatever.
Yeah, or they might flock to it just to see what the fuss is about. It's hard to say. But yeah, box office, that's the key here. For WBD, I mean, their whole DC franchise reboot hinges on this.
Exactly. So this actor's comments, they're not helpful, to say the least. Adds another layer of complexity to the whole thing.
Complexity is one word for it. Chaos might be another. We'll see what happens. Now, what about this next one? Tupperware, bankruptcy? Wow, that's big.
So it looks like we've got some exclusions to discuss. Vague crypto promotions, for one. Turn $100 into $1 million with XRP. Yeah, right.
Right? No concrete metrics, just hype, hot air. That kind of thing doesn't cut it.
No, it doesn't. We need substance, numbers, data, not just empty promises.
Exactly. And then there's the historical stock performance stuff. Fiserv, MetLife, looking back, doesn't tell us much, does it?
Not really. Past performance, not a guarantee of future results. We've all heard that one before. What we need is forward guidance, projections, insights into the future, not the past.
Right? Where are these companies going, not where have they been? That's the key question.
Absolutely. And finally, minor PE updates. Baker Hughes, for example. A little tweak to the PE ratio. So what? Where's the catalyst? What's driving the change? We need to understand the why, not just the what.
The why. Yeah, the underlying, the engine of growth or lack thereof. That's what matters, not just some minor number crunching.
Exactly. So vague crypto historical stock data and minor PE tweaks, all excluded. Makes sense, right? We need actionable information, data we can actually use, not just noise.
Right? Signal, not noise. That's the goal. So that wraps things up, I think, for this episode of Podcastify. Thanks for listening, everyone. We appreciate your continued support.
And a special thank you to our amazing listeners for your time and insights. It's been another exciting session of Podcastify, and we're signing off now. Stay tuned for more exciting episodes.
Bye for now, folks. See ya.